So good evening, and I hope you can see my slides. And thank you, Central, and thank you for everybody coming on this Friday evening to listen to a talk on real estate. And as Central has said, that I have a different experience, but I'll not talk about critical care. I'll not be talking about ECMO, but the topic is on real estate. Thank you, Central, for giving me this opportunity to speak to them. For those who have heard me, I've spoken in Telangana and Andhra group, and I've spoken in Gujarat group. Then I'll say that every time I give a talk, most of the bases will remain same, but I've always add some more slides, spend a couple of hours to go through and to make sure that I'm up to date. I made changes, so there'll be few slides which are quite new. So real estate, Mark Twain has explained it very well. Buy land, they're not making it anymore. He simply puts the word to the thoughts of most of our real estate investors. There's so many stories of people buying plots and lands in 50s, which are for few thousand rupees, now are being sold for crores. This is kind of a stuff that legends of real estate makes you feel that investment in real estate is alive and kicking. For me, real estate started about 30 to 40 years back. And two of my mentors, one is my own family physician, my dad's very good friend, who saw me since I was a child and was my GP. And he, in those days, there was nothing much to invest. I'm talking about in 70s and 80s. And he always used to invest in real estate. I used to remember him and staying in a very small one-bedroom apartment, and I would worry, okay, what is he doing? I should go with my father. And just about recently, after he's not fully retired, semi-retired, he bought a huge penthouse in the center of Bombay, in Worli, Prabhadevi area, a duplex penthouse with a bar and everything looking over the ceiling. It's amazing. And when you speak to him, he told, even before when I'd spoken to him 20, 30 years back, he said it's always invest in real estate. Similarly, my other eye opener was my senior, my mentor, my senior who from my JJ days, whom I went and spoke to a few times, and he's been a family physician himself, and he had about five. He has just now about five flats, two clinic, one for himself and one clinic for his son, and now his other son is finishing Optel. He's going to start an Optel hospital, just like you all, and he's going to start an Optel hospital in Bombay. So you can imagine just by investing in real estate how people can create wealth and how to do it properly is the main crux. Anything you do it, you have to do it properly. Now, why are we hearing this? Why are you attending this course? So, main thing is to differentiate between active investment and passive investment. Active investment is what we are making money from. We as a profession, as a doctor, what money we make is active investment. Investing on our own self, investing in our education and everything. Passive investment. Passive investment is the money which we invest in other things where the aim is that the money will start making more money to beat inflation plus 3 to 4% on top of the inflation per year. So if inflation is about 7%, I want to make money about roughly approximately 10 to 11%. Inflation was in the past 9%, I wanted to make money 12 to 14%. So that's the whole idea with passive investment. So the root crux of investment is to have a passive investment to have which beats the inflation, and you make 3 to 4% more. If you get more, it's fine. But the idea is on an average, you should get 3 to 4%. Now, you're attending this whole 10 weeks course, and everybody will be talking about how to increase your passive investment. For me, why do we need passive income? Passive income becomes very important from a very good movie, The Wall Street. Golden Greco, Michael Douglas was my mentor in 1989 when the movie came, The Wall Street. When he said in the movie, first time I heard, greed is good. It's good to be greedy. So, it was always being a typical Indian boy, you are always thinking that you can't use such words. And then you realize. And then when we went into med school, we make mnemonics. So initially we just made from GREE, G for gold, R for real estate, and E for equity. So, that's how my interest in real estate started after seeing that movie in 1987. And then it all happens together. In 88, 89, Harshal Mehta started coming into real estate. In Bombay, everybody was just talking about equity, equity, and that's how we started into real estate and equity. So that's how I started my career in 89 in equity. What's the aim? I say that the aim is to make sure that you have a balanced portfolio, diversify, that you're 20% of gold, 20% of real estate, 20% of equity, 20% of mutual fund, and 20% of debt funds. Having a balanced investment by the age of 60. Obviously, this is theoretical. Practically, it's very difficult. But you make sure that you have a balanced portfolio. Usually, we say 10% of gold to 10% debt fund by 20, and 40% in equity mutual fund is good, and another 20-30% in real estate. So that's what it is. People like me who, after being injured in equity, after because of Harshal Mehta, I got bankrupt in 92, 93 when the big scam came, and my father had to bail me out. I was a little scared. So my equity portfolio is less, my real estate portfolio is more. But you have to do what you want and make sure you have a balanced investment. Earlier you start, the better. So I would say to everybody, especially youngsters, earl- as soon as you get your first pay, you start investing. Okay, 25, 26 is when we start getting our first pay. That is when you used to start investing. I was lucky, means I used to, in our times we used to work. So even in my MBBS days, I used to work extra and I used to make money, and I used to start investing even in those days. So this is a wheel of your wealth creation. Okay. So this wheel will tell you that you need a for wheel, you need all parts of wheel, which is your property, real estate or equity or bonds, cash and gold. So you need all five things together to make sure that you have a very strong wheel and a successful wheel. People say one is better than the others. It's all hearsay. You can decide what fits you. You find whether equity suits you, property suits you, gold or bond suits you. You have to decide yourself what suits you better. Okay, but you need to be in everything. Can we silence that person, please? Thank you. So, where should you invest? Okay, people talk about investment. One sec. Yeah. So people, let's talk about two things: equity versus real estate. Both of the returns are moderate to high, and can be real estate can be low to high. Safety wise, equity is low safety and real estate is moderate safety. So that's a safety issue. While equity can be low to high liquidity, real estate is low to liquidity. So you have a more safety, less liquidity, and returns are can be same as equity. Volatility, people say real estate is more, both equity and real estate both have high volatility. Okay, so don't be in a guidance that one is high, one is low. Both are equally volatile. Okay, but one has a moderate safety and one has low safety, and we'll have discussion on that more. At the same time, if you have any questions, please start putting it in the chat box so we don't forget when we are going through the end of the talk. So please put your questions as we go through the slides. Okay, so why real estate? One, we said we need a passive income which has to be whole ball. As we said, the risk is moderate. Return always beats an inflation, 2 to 4%. Approximately, you will get a CAGR of 10 to 12% ideally. It's a lifelong. Once you invest, lifelong passive investment. After that, you don't need to worry. I'll show you ways where you return of the original investment within 5 to 7 years. Once you put your money, how you can get your money back within 5 to 7 years, and after that, your money is free. You still keep on making money. Real estate people say have I have a lot of maintenance. I'm not going to say no. You have maintenance, you have to take care of it, but how to make it zero maintenance? That from the investment only you get the maintenance costs out. So we'll discuss, and mainly we make sure that you understand how you get the return of investment and how you make it zero maintenance. So real estate is really booming in India for last nearly from 2004 onwards, because as we know is large population base, lot of rising income levels, Rapid urbanization, a lot of people are moving, and it's the second largest employee after agriculture. What we are going to talk about is only residential space and commercial place. Okay, the other two sectors, the retail, land, and hospitality, hospitality like building hotels and industries, we are not going to talk about. So my topic as present, I'm going to just mostly cover residential space, which can be housing to buy to let, or commercial property where you want to buy commercial land or this. But we will not do the other part. What are the driving of the real estate? Okay, as we said, the country is really economically performing. When we were interns, we were making 300 rupees. Now you see the interns are all making 30 to 50,000 rupees. There are more younger and smaller families which are moving out. Okay, we had 15 to 20 people living in a two-bedroom hall kitchen in Bombay. Okay, everybody here was staying as a united family. Now everybody wants not a joint family but a nuclear family. Okay, everybody was first staying in a two-bedroom. Now for each member of the family they want one extra bedroom, and after the COVID everybody was one or two extra bedrooms anytime. And the most important is migration. Okay, lot of migrations from villages to town, from town to cities, migration from cities to foreign, going to Europe, Australia, Canada, America. So a lot of people are migrating at any given time. Annually in India, 10 million people are migrating every year from one sector to other sector. The growth of our population, okay, the growth of population is was about 90, it's grown up from 1945 to 51 by 17%. Currently it's gone up to 32%. By 2050 we'll again grow up to 50%. That's why there's a huge demand for real estate. The size of the expected turnover of the market of the real estate is just booming like anything. If you look at the study done by Knight Frank is one of the people who are internationally a good real estate company. They do a lot of studies, they give lots of reports. So always make a point to make sure you look for the reports in your own area. I'm from Bombay, so I look at the Knight and Frank 10 years real estate report, and it says that the best in India for commercial real estate investment is in Bombay with return of 12 to 19%, and gives you the area where you can invest and you'll get a return of 12 to 19%. So you are finding something which makes you and you're guiding you where to go from. So in here, remember it says in East, remember favorable address is Central Mumbai. Okay, so that's what it says. Also, the government has made huge changes in the laws. RERA is the biggest change in the law, which really makes us very comfortable in idea of investing in real estate. There are a lot of old time stories that people used to just take over your property or land or everything. Those things are definitely getting less, and slowly they even get lesser. Also the same thing that a lot of developers were not building properties and were just making fool of us. Now those builders have been taken to task, and they've been told to file for bankruptcy, and the properties are, the whole buildings are given back to the people who have invested. So the developers are really losing, so now they have really upped their game. So that no longer can happen now. Everything in life is cyclic, whether it's equity, whether it's gold, and same thing is real estate. There'll be phases where everything goes up. Once it goes up, it has to go down. Then once it goes down, which is recession or contraction, then there'll be a recovery phase. Once it recovers, there's a boom coming. And this is what are the four cycles of any, not only real estate on. Okay, the cycles are usually like in 2020 we had a recession. 21, 22 we had recovery. 22, 23 we are seeing a big expansion. We don't know how long it will start, 24, 25, and then there'll be a contraction. And obviously after that recession comes. So if anybody says that you invest in anything which will have give you a lifelong only bull run and no bear run, is making a fool. Even in share market, we saw what happened in 2008. We saw what happened in 2000. We saw what's happened in a little bit over just now in this year, how in 23 the market has fallen about 10%. Whether it's going to contractive or whether it's again going to go back to expansion. Okay, so we don't know whether it's a bull run or what's going on. But this is a cycle of any investment. The idea is to think of investing here during recession and recovery, and keep quiet in expansion and contraction phases. Okay, most of the time it's very difficult to know when this phase starts. Most of the time, with experience, we try to do everything during the recovery phase. Like 2020, we were quite sharp after so many years of experience, and we invested during the recovery phase, and then we sit quiet during the expansion phase. Now the contractile phase is going, we just keep quiet. We know this will happen. We know that after that there will be a recession phase, and that what goes on. If you see me, all of them, whether it's real estate or equity or gold, cycles are between 5 to 7 years or 7 to 10 years. Okay, nothing lasts forever. Remember this, all cycles are 5 to 7 years, 7 to 10 years. You want to make money, keep invested for 7 to 10 years in anything, you will make money. Okay, what are the indicators of real estate? So if you want to put money in real estate, you need to know what are the important factors which you need to keep an eye. The most important is that place where the population is growing. You can't invest in a village where people are leaving to go to a town. Look what is an employment rate. Okay, like initially when I invested in Dubai, initially I was saying, where are they going to get employment? Dubai has no employment, which was initially in 2004, but in 2009 and 10 they started having employment. We thought we'll invest in Dubai. Similarly, look at the GDP increasing. How the GDP of India is increasing from 1 trillion we are up to 3 trillion. How the GDP of UAE increase. Other countries are increasing. How the GDP of West Europe is decreasing. So now is not a good time to invest in Europe. What is the disposable income? Okay, how people are spending money. You see the youngsters today, unlike us, we used to buy a small phone and think three times. Today your youngsters are all buying Apple and Samsung like anything. Look at what the stock market values are doing. Is the stock market also increasing? That gives a feeling of euphoria, and you know that you're going to be in good time. Find out things what is happening to demand supply in your own area where you want to buy. Get the data of that. Find out what's the average house price movement. Is it going up? Is it static or is it dropping? Look at what is the price to income ratio. Okay, so what income you're getting for the price you're investing. Find out what is the net rental yield. Okay, so your rental yield minus your expenses, what your net rental yield is, what you will get. So you know what what EMI or what percentage you should be targeting. What is the interest rate? So if just now you're in America or Europe, you can't buy houses. The interest rates are 8 and 10%, whereas the interest rates 5 years back was 0 and 1%. So there's a 10 times increase in the interest rate in America and Europe. So those places you can't buy. While in India, the interest rate from 12%, 10% has come down to 9% and 8%. So interest rates are falling. It will continue to fall. So that's the place to buy. And again, I want to say, most important, demand supply in your location, location, location. Find a good location where there's a good demand, okay, and less supply. Easy to say, difficult to find, but you need to do a lot of study for that. The current scenario of India, as we said, is it's happening. There's economic downturn in US and Europe. Especially, we can see the consequences. The IT companies are doing poor, while the real estate in India is increasing, and the business sector is getting a growth of GDP of nearly 10.6% in last decade or so. Demand for real estate is supposed to grow annually. There's annual demand growth of nearly 19%. And institutional credit for housing investment is growing at a CAGR of 18 to 20%. All the banks' housing investment, if you look right from big HDFC housing and everything, their investment giving loans for housing, which is the most profitable, they're growing up to 20% every year. So that's a big thing going on. Other factors, as we said, is rapid urbanization, policies, change in FDI relaxation, okay, surge in industrial and business activity, as we seeing a lot of it is happening. And as a grassroots level, अपने को क्या दिखता है? FDI relaxation, consumerism, all we can see together. We can see that where the malls are happening, how big the malls are happening, how crowded the malls are, what are the prices of the entertainment. Tickets during our time was 20 rupees. Now tickets are 200 to 300 rupees. When a whole family goes for a movie in the multiplex, 2-3 हजार तो ऐसे ही चले जाता है. So leisure and entertainment is expensive. That shows there's more disposable income. So the country is doing well. So this is a segment which is really done well. But always remember that it's a cyclic effect. We said the same thing had happened when there was a global meltdown. The real estate in India, like the others, had a big fall in the 2008 and first half of 2009. There was a decline in nearly 18 and 20% by March 2009 from the initial peak of 2008. So it went down, but at same time, by 2010 to 2012, it picked up 30 to 40%. So same thing we saw, which happened. Same thing happened in during COVID time. COVID time, the prices crashed down to by real estate crashed down by 30%. Real estate crashed down by 30%. Those who bought in 2020 and 2021 are now singing because they brought it down at 30% less. Not only the prices by 20 end of 2022 went back, by 2023 there's 20 to 30% increment in the baseline price of pre-COVID. So you imagine what's happening to real estate in India. So as we said, the real estate is really growing. We can attain a CAGR anywhere between 14% in short term and 20% in a long term is what is nearly expected. As we said that there's a lavish lifestyle, high disposable income, and the tendency to spend. Unlike our parents, okay, who used to save 90 or 80%, today's generations don't believe in saving. You'll be lucky if they're saving 10 to 20%, and they're smart like us, then they'll save 50%. Okay, but we are not going to save 80 to 90% like our forefathers did. The biggest example for real estate investment is Burj Khalifa. This is the tallest commercial real estate ever built in early 2000. People said that we are making a 160 floor real estate all for all for commercial property. All of them will be for the commercial property for giving it out. People said, are you crazy? Who is going to buy so many properties, and where are you going to go? Like we said, people were scared in Dubai. Where is the disposable income? What are you manufacturing? What other things you have? But that was in 2000. Okay, that was in 2000. Into last year, Burj Khalifa, by 2020, the real estate in Burj Khalifa was not available. It was going at a premium of 20%. And last year, Dubai had a highest CAGR in the world of 45%. Okay, the real estate in Dubai went up by 45%. It did go down in 2015 and 16, but since then it's going in a boom cycle, and it is just going in boom cycle. And in fact, in the COVID time, Middle East was a country which really had a huge demand for real estate. So we talk about real estate. The idea of seeing Burj Khalifa is the Burj Khalifa is a multi-bagger. As we in shares say, multi-baggers which multiply your property. So multi-baggers do have in real estate as well. Okay. As we spoke about Burj Khalifa in Dubai. Burj Khalifa in Dubai had 49%, as we said last year. Same thing, Knight Frank thinks that Mumbai will have a real multi-bagger in 2024. I'm already seeing that. As I was telling you, my friend who bought a huge complex in 2021 for commercial complex for investment, within 2 years, he doubled his money and is out of it. He's already sold the whole thing. So you when you are lucky, you are in the right cycle, you get it in the right path, it goes. It's the same way in real estate or in gold or everything. It comes with experience, it comes with risk taking, and finally it tucks in the luck. And as we say, same thing is happening in India. In India, you can see that in big cities, okay, Hyderabad had a buoyant sales, increase in buoyant sales of nearly 1,300 percentage. Delhi NCR had 205% change. The biggest advantage, DLF property, as you must have seen in news last about a month back, they made three big complexes, okay, and they plan to sell it only for 3 days. Minimum property ticket size was 1.5 to 2 CR, going up to 8 to 10 CR. They were planning to sell it for 3 days. Within 48 hours, everything was sold off. Okay, the whole property, three big real estate complex got sold off in Gurgaon in Delhi NCR. Okay, same thing is happening in Pune. Same thing is happening in Calcutta. Bangalore and Chennai is a little bit behind, and we can understand why, because Bangalore, Chennai relies a lot on IT sector, and that's a sector which is not doing well. Okay, but on an overall, there's a buoyant sale of nearly more than 130% just in 1 year. So this is a multi-bagger time of real estate. So now, if you tell me somebody to buy, I say no. Boom time, enjoy what you have, wait for the time where it starts contracting and you think it's going in recession. Okay, now is the time to make sure you put your investment in something else. So is it equity versus real estate? People often say that is it equity we should invest or real estate or gold? I say no. You should be investing in equity and real estate, equity, real estate and gold, equity, real estate, gold and debt notes. Okay, it should be all the things parameters you should be investing. Why? So let's talk by comparing real estate and equity. In real estate, we talk about rental yield. That is equal to the dividend you get in your equity. In real estate, we make money in capital appreciation. In equity, we make the money in price increase. Okay. Equity, we keep on seeing in the newspaper, so we feel good. We keep on seeing, we feel bad. Capital appreciation, real estate, we don't bother. आज मेरा प्रॉपर्टी का भाव कितना बढ़ा, we don't bother for 3 to 5 years, which is the right attitude, but it does appreciate. So if you see how real estate and equity goes, most of the time real estate and equity usually follows, or sometimes it goes in the different direction. So it's good to, that's why it's very good and important to make sure that if you had invested in real estate here, okay, then you would be buying at the right price. If you try to invest in equity here, you're buying it at a peak into in 2006. For 6 years you will not get any increment. So if you buy a real estate here, you will get nearly 12 to 15% increment over a year. So this is how you have to see what is going on where. If I was buying real estate over a year in 2001 to 2, when equity was really down, after the 2000, after the dot com boom, the real estate dropped drastically, and the equity dropped drastically, and the real estate really picked up. Equity was down for more than 5 years, less than 5%. Okay, and that time was the time when the real estate gave a good return. So when you're making loss here, you have something which is making profit here. When you're making profit here, you little bit in loss over here, it's fine. But this is how you should see how you can. And there'll be a time where both are next to each other. You need to just wait it out and enjoy what you have. If you take an example, pre 2000, before the boom of real estate and before the boom of equity, if you invested 6 rupees in both real estate in blue, real estate in red, equity in blue, 6 rupees, Sensex would have given you 422 rupees, and real estate would have given you 400 rupees. This is a known calculation based on it. So, when you are long term investment of more than 20 to 25 years, both of them will give you nearly same return after 20 years. And that's why we said that when you invest, make sure that you invest it for long, especially for real estate. Equity, sometimes you might be able to get lucky and get out fast. Same thing in real estate. Once you get good at it, people buy and sell quite more, and that's the way it is. When we talk about equity, people only remember that equity when the prices are good, like just now, like we're having a bull run. But if you look at the Sensex, history of Sensex since last 30 years, you can see that there are multiple decrease in annual return in the below the 0%. Your equity gives a negative annual return. Nothing as bad as 2008, where it gives 60% decrease in annual return. Okay, in 2020 it was about 13 to 15% negative return. Okay, and the phase of between 2000, between 99 to 2003 to 4, your returns did not come up. Those were the worst 5 years, and all of us lost money like anything. Nearly more than 50% we lost, and it never came up. In fact, this is the time where after 2000, 2001, I decided to diversify. I lost my money, as I said, in 92, 94 during Harshad Mehta time. I went back into the market, again lost a big, huge loss, 50% loss in 2000. And that's when I realized, I read about it, and I started diversifying. And my history and investing in real estate started in about this phase. Okay. So this is what happens where, so people forget about this, the history, that nothing is steady, everything is up and down. Look at the equity ratio. Okay, look at the negative. I said equity gave negative ratio of 5 to 7 times in the last 30 years. Okay, so this is negative of, so anywhere from 6%, 16% to 52% negative. And people forget that. People forget to look at the history. They remember कि यार रियल एस्टेट का भाव गिर गया, गोल्ड का भाव गिर गया, लेकिन इक्विटी आते तो भूल जाते हैं. And people are very smart. Mutual funds and all always gives that we made so many CAGR return, but they never tell you that shares like Reliance Power, one of the biggest shares. We all had a boom time when we invested in Reliance Power. That company no longer exists. Reliance Finance company does not exist. Mafatla, Century, we were crazy after those stuff. They no longer exist. Recently, Birla Tires, Anil Ambani's company, they no longer exist. So people forget that the equities, when they go down to zero, they go down to zero so fast. And so one interesting thing is to observe that if you look at since inception, okay, since 1969, if you look at it, the BSE Sensex has given positive return only 74% of the time in 42 years. So 25% it has given negative return. And out of that 74, when it gives return, only 57% of the time is double digit return. So double digit return of more than 10% is only 50% of the time in 40 years. So only 20 years it's given double digit return, 20 years it's given single digit or no return. So remember that. It's very important to be knowing our statistics and understanding. If you look at the since inception, people talk about since inception in 1986 when the real estate indices came up. Okay, BSE is much more longer than that, but Bombay Stock Exchange indices came in 86. If you look at this delivery, it's giving 13.6% CAGR. Okay, 13.6% is what it's giving since its inception. So even people who like me who invested for long, we have made about 13.6%. Remember in those days, early days in about 1980s and 90s, 15% and 18% was the interest rate. Okay, so those times we had made losses in the Sensex. And if you take last 10 years, the CAGR is 12.8%. So if you check from 2013 to 2023, so I missed out the 2008 drop. Okay, so I'm taking from 2013 to 2023. Obviously, we had a big drop of 13 to 14% in 2020. But that's what I'm saying. This will happen. So if you look at the returns, 10 years, 20 years, 30 years, 10 to 15%, and you should be happy. Your aim in life should be, as I said, investment should be interest plus 3 to 4%. Interest drops to 5%. My investment gives me a return of 8 to 10%. I'll be happy. So do not make a fix. I want a CAGR of 15%. Don't try to get a CAGR of 20%. If you are trying to get a CAGR return of 20%, then you're gambling. Okay. And then you're playing FNO and all that. That is rubbish. Be happy. We our money is hard earned. We do not make money by where we work. We have educated ourselves for 30 years and we have 30 years to make our money, and then we want to live peacefully. So be happy, expecting. My aim in life is always to get about 12% CAGR. If I get 12% CAGR overall, looking my real estate, equity, mutual funds, everything, my debt and gold, I'm happy. Okay, so that's what we would say. And look at that. Now, this is your annualized return. This is not a CAGR. If you look at the annualized return over here for Bombay's BSC index, okay. Now, look at the drop in when Harshal Mehta took over the scam, 47% drop. And the biggest drop was starting at 99. 99 only the 7 year return had already come down to minus 2%, minus 440 minus 2. Then the 2000 dot-com boom collapse came minus 28% 1 year, 3 years minus 3%, 5 year return is 1%, 7 year is 1%, 2003 12 to 3%. By 10 years, if you had invested from 1993 to 2003, your annual return was investment was only 3%. So people forget this, that how bad times we had from 99 to 2003. Obviously, after that it made a huge recovery, and from that it kept on recovering. Again, we had a big drop in 2009, but we came back quite, bounced back quite nicely. All of us missed. I didn't invest much in 2009, so we invested quite a bit in 2020, where there was a drop of 24%. Okay, and then we have come down. But this tells you that there will be a period of 4 to 5 years, whether it's real estate or Sensex or equity or gold, that you will not make money. That's why the idea of balance comes. Similarly, let's go to gold. Now, gold history with Indian it's not possible because Indian rupee depreciates a lot against international gold. Indian rupee was 20 rupees a dollar in 1980s when I went abroad, and now it's about 80, 83, 84. So we can't do gold with Indian rupee. Okay, so let's with Indian equity. So you take gold with US equity S&P 500, which is equal to BSE of America. And let's take 10 years. 71 was when the gold came away itself as a with the currency. So okay, gold became independent. So look in 10 years from in 72 to 85, huge returns. Sensex at that time was less. Next 10 years, Sensex was less. Gold was, forget the figures. Look at the thought process what I'm giving. The Sensex was less, gold was more, and vice versa. Again, the gold was more, Sensex was less, and then it changed again. So it goes, gold and equity goes up and down. Just one sec, I'll just get some water. So if you look at since 1972, the return on equity was 10.6, gold was 7.4, and the volatility was less on equity and more in gold, which is vice versa than India. But this is what the history says over there. So a lot of things happen. So people will say that okay, the gold market is better return and less volatility. But then one would say that is equity better than in long term? But how many investors would be willing to sit through 2000 to 11 years period? Like in India, we had 2000 to 2004 in S&P from 2000 till 2011. Okay, 2000 to 2011, the equity gave no returns, and two times it had 50% drawdowns in between. So between 2000 to 2011, equity hardly gave 77%, and between that decade, the equity dropped by more than 50%. At the same time, you think that the gold is better, gold can bugs, but at the same time, gold had a steady state where it said same for a period of 1980 to 99. Same thing, the gold in India between 2004 to 2014 was quite steady. So, and it nearly halved its investment. So at the end, what are you saying? Which is a real winner? Real winner is neither stock bull nor stock gold. The whole idea which the report comes out from Warren Buffett, he says that investor can actually remain invested for a long time in a single asset may be maintained by a diversified portfolio of multiple assets, stocks, bond, real estate, and commodities. So this is what they are saying finally. Okay. If you want to be a wealth creation, you should have a compound of everything. Why am I saying all this? So I've divided my talk into two halves. The first half is just giving you a brief idea why we should be investing in real estate. And the second half, which I'm going to soon start, is just some practical tips how we'll invest in real estate. Okay, so just to tell you. So now we are nearly about to finish we talk about equity and real estate. Now we talk about gold and equity. Now we are just going to give you the good side of real estate. Like any talk, everything has good and bad. I pointed out the bad things of real estate, or bad things of equity, and bad things of gold. Now I'll tell the good thing of real estate because that's my talk is about. Okay, so if you look at the Knight Frank's report of last 8.5 CAGR city wise, each and every city in last 8.5 years is showing a return of more than 15%. Okay, so in India, average comes about 12%. Bangalore is very low, which is 5 to 6%, which we showed you why Bangalore and Chennai are low. But Delhi, Mumbai, Bhopal, Calcutta, all are going nearly 15%. So this is a CAG return in real estate in last 8.5 years. And we talked about how the sale is moving in last 1 year in all the tier A, tier B cities in India. Now let's start taking example. Okay, so we have decided that we are going to have a portfolio which is balanced. We have a little bit of equity, we have a little bit of gold. Now we're going to plan about real estate. Climb the property ladder as soon as possible. As soon as you start investing, okay, I say as soon as you start having money, earmark 50%. If I'm making 1 lakh, my investment, my saving is going to be 50,000. 25,000 I'll put in mutual funds, earmark that in 5 years, I'm going to buy with that money equity. 25% I'm just investing in mutual fund for whatever. Okay, so remember that. So when you invest in first 5 years, if you have less money, then invest more thinking I'm going to buy real estate first. Mutual funds, equity you can buy anytime with small amount. Real estate needs big amount, so you need to plan it. So you have to plan 5 years in advance. So okay, so I'm going to invest in my SIP in mutual funds with my first investment. So in 5 years I can buy a real estate. So if I'm putting 50,000, if I'm putting 50,000 in real estate every month, okay, I'm going to put for 5 years. Expected return in SIP real estate is more than in equity and mutual fund is approximately 12%. Then I'll have a money of 40 lakhs. Okay, so I will have 40 lakhs in 5 years later to buy a real estate. Okay, so now if I'm going to have a 40 lakhs real estate, then I'll look at the property where I want to buy the property. I'm from Bombay. I'll go back and do my research. So I'll go and look at the research and look at what are the night rank report for last 20 years. Night rank report says in Bombay the house prices have increased by nearly 10% every year for past 20 years. So for past 20 years in Bombay, at least we know that there's an increase of 10% of the house prices, and last 8.5 years there's an increase of 15% CAGR. So I'm happy that I'm from Bombay, I'm going to buy a property in Bombay. Similarly, when you are going to buy property in your own area, find out the reports in your own area, do your own understanding. For example, I'm just starting with residential property, then I'll move to commercial property. Okay, so I want to buy a residential property for buy to let. Always first real estate when you're buying should be buying to let. Don't make say that I want to live in my house first. No. When you are young, you should be making income. You should be staying yourself frugally, but you should be buying something to invest. So I'm going to buy to let. Now I'm thinking that I'm going to buy a property in Mumbai. But what range price range should I be looking for? So look at the demand supply. So demand supply, my within 40 lakhs is my budget. The demand is more than the supply. And if I increase my budget to 1 CR, so demand is still more than supply. If I go above 1 CR, then the supply is more. So I will concentrate between 40 to 1 lakh. So I have 40 lakhs and I can easily aim for 1 CR property. So what's the advantage of investing in real estate? Biggest advantage is cash. Okay, we all are working as a doctor. Let's be honest, all of us have cash. A lot of people give rubbish that pay the money and tax and 30%. I said we are not making so much that we can pay 30% tax and then make it wide. So we have wide. Luckily in India the cash works in real estate so that our cash gets used up. So 30% CAGR we already had. So as soon as I invest my cash in real estate, I made a profit of 30%. So that positive attitude comes into you. Okay. It helps me to diversify my portfolio. It's going to start giving me income. So rent will pay part of my mortgage. As soon as I buy a flat or a house for rent will give me part of my income. It's going to be a steady rent. We know that every month I'm going to get this rent. Okay. We can hedge it against the inflation. I'll show you about that. And we're going to leverage it. Okay, leverage is when you buy something taking a loan. Real estate is the only way where you can leverage your real estate against bank to buy take a loan. Little bit of gold. So gold and real estate are the only thing where you can leverage. Equity you should never leverage. Never take a loan against your equity. Okay, so only and never ever take a loan against your fixed deposit. Fixed deposit is your debt fund which you need for your emergency. So never leverage against your fixed deposit. Leverage only against your real estate and equity and real estate and gold. Okay, appreciation. Most of the time, real estate in 7 to 10 years will always appreciate. And I am deciding about what real estate to buy. I am making a decision. It's my decision. It's my security. I know what I'm doing. I'm going to study myself. Everything is under my control. We are doctors. We like to know everything and decide everything. Not relying on a company, on the management, or not relying on the mutual fund, on the fund management to decide what to invest, what to return, and how much to return. And some fund management are such chore, they give a boom time in 1 year, second year they go into down. Okay. So here we don't know that. Yeah, I'm deciding everything. It's in my control. I feel very safe with that. With that. And you do have minor benefit of tax. That's not important. Okay. In rental, in personal loan. But when you take a company loan, the tax benefit is humongous. So we will go through both the scenarios. Disadvantage, we said it's high cost. Long term, we have shown that equity, all the investment equity, gold, and real estate all have to be long term. Risk, real estate is moderate compared to equity. Liquidity is an issue. Liquidity cannot be as much as equity. Okay. And there's a maintenance cost. So maintenance cost does exist. As we said, we'll show you how your maintenance cost can be nullified. I hope I'm all with all of you. Okay, now so let's start with climbing a real estate. So as I said, we're going to buy first property to let. We are going to invest about 40 lakhs. When we invest about 40 lakhs, okay, then we always say that my investment, my down payment should be one third, and I can take a loan of 70%, 60 to 70%, 33% loan, 33% down payment, 66% loan. So if I'm taking, I'm investing about 40 lakhs, then 80 to 1 CR I can easily take as a loan. Okay. So EMI should never be, and at the same time, but I should know what I'm making. So if I'm taking a bigger loan, I know if I'm making 1 lakh, my EMI cannot be more than 30% of my income. My EMI cannot go more than 30 to 35,000. Okay. So let's go to a nice housing website and we go to SBI website. And for convenience sake, I've taken the photographs to save time because otherwise I'll overshoot. Okay. Am I on time? I had about 1.5 hours to talk and half an hour we're going to do question and answers. So is that correct? Hello?
Yes, yes, doctor. Yes, doctor.
Okay. Thank you. Okay. So let's go to the SBI website. So you go to SBI website for home loan. You go to the SBI website for EMI calculator. So once you put an EMI calculator, we said we had about 40,000. Okay, we want to take about 85,000 loan. Okay, so if we take 85 lakhs, sorry, we had 40 lakhs, we're taking 85 lakhs loan. Always take your long loan for long tenure. Don't try to pay your leverage your loan for less tenure, 10 years, 20 years. No, always keep for long term. If you can, later you have a boom, you get a lucky, you get a lottery ticket, you can always pay faster. But when you're taking it, just keep it for longer. Take an interest rate of 7.5 to 8.5%. So if you take 85 lakhs, my EMI goes to 60,000. For my first property, I can't take loan of so much where my rule of 30% is broken down. I can afford a EMI of 30 to 35,000. So I cannot take a loan of 85 lakhs. So I reduce my loan of 50 lakhs. As soon as I reduce my loan to 50 lakhs, I have 40 lakhs. I'm taking equal amount of loan, 50 lakhs. My EMI is 34,000. I'm safe over here. Okay, I can get more loan, but I'm not going to be greedy, knowing how much I can afford. In case something goes wrong, safety first. Okay, with your first property, always be safe, take less loan. Okay, and also it's on your personal name, so you don't need to take much headache with that. And you're trying to get experience with that. Always get experience with the first buy to let. It's like, when you invest initially in equity or in mutual funds, you usually go a little bit slowly. uh, uh, So I have 40 lakhs to invest. I'm taking 50 lakhs loan. Okay. My EMI will be about 34,000. Okay. So let's go there. Now I'm looking for a building. We had looked at Knight Frank. Knight Frank said, buy a property in central Bombay. Central Bombay, lower Parel area is happening. Lot of bankers have moved, lot of foreign companies have bought properties and building there. But lower Parel area, I cannot afford. Okay, so I'll lower Parel is 40 to 60,000 per square feet. My budget would not come there. I'll get a very doghouse over there. So I buy the area next to it. Next to the lower Parel area is a Lalbagh area. Okay, so Lalbagh area near lower Parel area will be 30 to 40,000. On other side of lower Parel area, I'll take about 30 to little bit less, but I get a more square feet. And always look for something which has good. I'll buy a I'll buy a 500 square feet carpet area, two bedroom hall kitchen. Advantages, it has a parking. Everybody wants building with the parking, and it has a giant temple. So if something is next to a temple, next to a station, it will be rented out easily. Okay, don't look at the square feet area. People laugh when I talk in Bombay that in 500 square feet you get 2 BHK. Okay, and when you're buying in carpet area, the built up area is 30% more. So my built up area will be 600 square feet. Okay, so 600 square feet flat, 2 bed HK with giant terrace and all. And we'll see how much before buying. If I buy this property, how much rent will I get? Okay, as I said that when we talk about Bombay, 1 BHK is 375 square feet. Okay, in Bombay, that's equivalent to 600 square feet in Delhi. So my 2 BHK is 525 square feet, which I said is 600 square feet. And Bombay is equivalent to 900 square feet in Delhi. And 3 BHK is 1000 square feet. So in Bombay, all the things you have to take it respectively. What is the area in Bombay? Look at the cost per square meter in Bombay. Look at the cost per square meter in Delhi and Hyderabad and Bangalore. And that's why you see why in Bombay the property prices are so high and we are having smaller area comparatively. Okay. So now if I rent it out, okay, 600 square feet built up, I get 32,000 easily. Okay, 2 BHK movable, then I'll get this. But advantage we have is we have a temple, we have a station, we have a parking. So we can expect a little bit more than this, about 34,000. Okay, so we have so let's do a calculation. EMI is 35, then minimum will get 32 even without the other alternatives. My plan was I can afford EMI of about 30 to 40 lakhs, 30 to 40,000. Okay. Maintenance is 10K. So SIP investment. So SIP investment for 30K for 5 years, 20K for long term. Okay. Oops, something has gone wrong. So my EMI is 35,000, rent is 32,000. My plan is 40K. Okay, I'm invest and now maintenance is 10K. So out of 50K, which is my every monthly investment for real estate, I am getting back 32% easily, 32K easily. Okay, so 32K is going in 50K. My difference is only 15K. So I'm paying only extra 15K per month for next 2 to 3 years. Now at the same time, 15K putting in real estate. So because I'm putting 15K real estate investment, I'll decrease my SIP investment. Initially, I was making an SIP investment of 50K. I'll decrease it to 30K. 30K I'll invest for next 5 years. Okay. Initially, I would put for 2 to 3 years. My plan will go to pay for my EMI and maintenance. And after that, I can use that 20% for long term. Remember, increase in rent is 10%. Your dividend yield does not increase by 10%, but your rent will increase by 3.10%. So if you look at 32K, 3.2K per year is just a simple interest increment. So every year 3,200 will be increased every year. So after 10 years, you'll have an increment of 10K. After 3 years, you have an increment of 10,000. 32,000 is your rent. So after 3 years, your rent will become 42K. So after 3 years, when you have a rent of 42,000, it covers your EMI 35 and your expense of 10K. Okay. So roughly about 40 to 45 will get covered by your rent and your EMI, and your expense becomes free. And this we have taken a simple interest. If you do a proper compound interest, everything becomes free. So by 3 years, your EMI is covered, your maintenance is covered, and you do not any longer have to put money in your property. Okay, so your property becomes maintenance free by 3 years. What will happen after 7 years? After 7 years, your property, we have taken increase of simple interest by 10%. After 7 years, your interest will increase, your property rent will increase by 22,400. Initially, it was 32,000. So after 7 years, you will be getting 55,000 as a rent. 55,000 as a rent. 35,000 is your EMI, which has always been fixed for 30 years. In case in 7 years, your maintenance from 10,000, 50% increase in your maintenance, say 15K. Okay, so your expense is 5K. You have started saving 5,000 rupees after 7 years. So after 7 years, Your real estate has started showing you profit of 5K, and this is increasement of 10%. Okay, you have put 40 lakhs. After 7 years, you're getting a 5K increment, and that is it. And this 10% you put in it back in your SIP, which you are investing for your this, and then you see how it increases. What happens after 12 years? After 12 years, your rent is increased from your base amount by 40,000. Your rent is 32K initially. So after 12 years, you have 72K is your income. Your EMI is 35. Even if you take 25 as your expense, you are saving 50,000. As soon as your first property after 12 years is giving you 50,000 profit. 12 years from your first property, you're giving your maintenance free, you're getting a passive income of 50,000 every year. This 50,000 I'll start putting back into the I'll start putting back a new SIP, looking for my second and third. Already I'm putting 30,000 as a first time, and there I'm starting my second SIP for my third property. Okay, now let's go back. Is this clear over here? If any doubt, you just write it in the question and answers. We'll come back and look at this figure again to make sure you all understand how within 3 years you become maintenance free, how within 7 years you start making profit, how after 12 years you start making substantial profit. And this is all calculated, and you know it's in your own control. You're not relying on anyone else to see how your profit is making. Okay. So that 30,000, as we said, we put 30,000 investment in SIP. Over here, we said we started from 50,000 SIP, we decreased to 30,000 for real estate. Now, this is my second property. We bought one property. Now we are wiser. We are going to buy second property. We invest 30,000. The plan is to invest for 7 years. Look at 12% expected return. Okay, increase the investment every year by 10%. So if I'm investing 30,000, next year I'll invest 33,000. Year after that I'll invest 36,300. So increase by 10%. So my this compounding effect will start by investing 30% plus 10%. By end of 7 years, I have 50 lakhs more. I have 50 lakhs to invest. Initially, when we invested 50,000, we had 40 lakhs. Now, when I'm investing 30,000 with 10% increment, I have 50 lakhs. Okay, by 2 years. So this is how it works. This figure, this chart is easily available. If anybody wants, WhatsApp me. It's a Excel sheet which is prepared by one of our pediatric doctor, Dr. Harish Gopal, and it works. There are a lot of these charts available online if people want to use for calculation. So coming back, now I have 50 lakhs investment for my second property. Second property, always buy a commercial property. Buy a commercial property, form a limited liability partnership, form a company. Okay, LLP, you form an LLP with you and your wife. Again, we said we have 50 lakhs, okay, and we'll take a loan of, as we said, 30%, we can take a loan of 1 CR. Why we want to form a limited liability? All interest is tax deductible. On your personal loan, upper ceiling is of 2 lakhs. Interest up to 2 lakhs is tax deductible. As an LLP, all interest you pay on 1 CR is totally deductible. All expenses are tax deductible. Anything you use for to renovate, maintenance, everything is tax deductible. Initially 2 to 3 years you'll make a losses. The stamp duty payment, the lawyer's fee, the collector's fee, everything is your loss. All that is carried forward. So initial 2 to 3 years your expenses are carried forward. And remember, it's always easy to sell a company. If you want to sell a company with limited liability with an asset, it will go much faster than trying to sell a house in a personal name. Commercial properties, limited liability partnership sells faster than a personal name. And remember, at present there is no inheritance tax, but in future governments wants to tax everything. Future for personal tax there will be inheritance tax. If you give inheritance, if you inherit a company, there will never be any tax in the world. But if you inherited a property, inheritance tax will come. So remember this: in 10 to 20 years, I predict inheritance tax will come. Going back, so now we are looking at a commercial property. Our investment is 50 lakhs. I'm going to take a loan of 1 CR. Going back, if I take a loan of 1 CR, again, as we said, 30 years maximum, 8.5 to 9 year, we are taking 1 year, 1% extra because it's commercial loan. It will be 9.5%. Okay, my EMI is 84,000. Okay, so I'm making 84,000 EMI. I need to make sure my commercial property makes about at least 80,000 easily, so I can make it viable in 3 years' time. Okay, so my EMI is 84,000. I expect a commercial property which may gives me a return of roughly about that 80 to 90,000. So I'm looking for a commercial property. So when you look for a commercial property, you how while buying real estate, we look for something far. In commercial property, as they said, Central Mumbai, Prabha Devi, Worli area, the happening, most lucrative property area. Okay, the square feet is about 50 to 60,000. Now it's gone up to 80 to 90,000. Okay, so this is when we first did this talk. Okay, so I'm going to buy a 50,000. My budget is 1.5 cr, so I buy for 1.45 cr. Over here, I buy about 275 square feet. Okay, 275 commercial property is very good. Most of the things are smaller than that. Again, we look for added benefit. It's a parking. Make sure it has parking. Okay, the thing I forgot about what I forgot to mention when we said take a home loan. Always before buying any property, secure your loan. Go to the bank and secure your loans. Show them your figures and get a pre-approval. Loan pre-approval is very important. If you have a loan pre-approval, you are it's as good as cash. So when you are buying a property, the buyer will give you a big discount. The seller will give you a big discount. When you're buying a residential property, 20-30% discount you will get easily. Okay, when you buy commercial property, 10-15% you'll get discount easily if your cash is ready. So having a pre-approved loan is very important. So always approve your loan before you go to do any property. Coming back, I'm looking at a 275 square feet built up area. I'm going to pay about 1.45 cr. So that's good. So that's behind me. What is the rent I'm going to get? So about 65,000 per month I'm going to get. Okay, so I'm going to get about 65,000. That's not enough. So how I can get more rent from that same property? So that's what we are going to do now. I'm just giving you a rough idea how you can divide your commercial property. So my clinical property, I'm going to divide into clinic or a shop. My 275 square feet, I'm going to give 125 square feet to a pharmacy and keep 150 square feet as a polyclinic. Okay, that's in India. People have polyclinic of 50 to 75 square feet as well. So don't laugh. This is Bombay, and pharmacy people will be so happy that if you give them a clinic, pharmacy next to a clinic, they'll just take it away. 125, 100 square feet, 150 square feet is the average pharmacy site. So I'm going to divide my property into pharmacy and clinic. This is just an example I'm giving. You can divide into pathology. You can divide into anything what you want. Okay. So what will I do? I'll charge him less 65,000 I'm getting. I'll charge him rent of only 30K. But I'll become a partnership. I'll become a partnership with him, which gives me a minimum guaranteed partnership of 25% because I'm charging him less. Okay. And plus on his profit, I'll take a partnership of 20%. So after you make a profit of 50,000, 25,000 for me, 25,000 from him, for I'll get 20%, 80% his, 20% me. Do I expect the person to be loyal and giving 20% exactly? No. Let's be honest. He's going to be giving you less, but that's okay. You have to be. Sometimes it's good to be. It's called be wise and be a fool. So a wise man who be a fool is much wiser than a fool who thinks he's a wise. So over here, be a wise man, be a fool, and see you'll get less. But over here, get a signed contract. The price will increase by 10% per year. Okay, you are looking at a long term figure. The long term, your rental income will increase by 10% every year, compounded. Okay, this will come more up. Now you have a clinic you divide into 2 hour slots. This is what everybody does. Even I have sat in the polyclinic for 2 hour slots. Okay, in the polyclinic you can give a contract of 5% or no increment per year. First 3 to 5 years, you want the goodwill to come up, patients to come, for your pharmacy to be happy, for your things to be good. So look at the bigger picture and keep your doctors happy. It takes 3 to 5 years for a clinic to set up. So initial 3 to 5 years, don't be greedy and ask for 10% increment. 5% increment for a peak slots and no increment for a non-peak slots. Non-peak slots are the morning slots. Okay, so you keep a less price for morning slots, about 10K. Afternoon slots are a little bit peak. After 3 o'clock, you keep 15K. After 7 o'clock, there's a peak slot, you keep 20K. So, those three, you can give 5% increment. These three don't keep increment. So, if you add up, you're getting 80K money income. You might be a one or two slots free. So you say, let's you're getting 60K. Okay. So 60K I'm getting for my slots by polyclinic, 30K I'm getting. So 60 plus 30K, I'm getting 90K. My EMI is 85K. K means thousands, okay? 85,000, 90,000. So already I am making 5,000 profit. 5,000 profit I'm making. I'm going to charge the pharmacy electricity bill in cash. He'll give me money in cash plus my minimum guarantee of 25K plus 5K over here. So already I'm making a profit of 35K. Okay, that 35K is my expense for my clinic. So expense for your secretary, expense for electricity, expense for your air condition, for refrigerator, for your cleaning, for your all the money you have to pay for the government and duty. So you can spend 35,000 every year. In the same time, remember you are taking a slot. So usually as a pediatrician, we take 3 to 5 or 5 to 7 slot. So my own income, I'll put 15K in it. Okay. So my EMI is 85. Okay, from 85, deduct 15, then I'm already saving 60K. 60K, I'm getting money from that. This 60K, I'll start a new SIP. Okay, 85K is my EMI, 15K is my expense. So 60K left. I'll start my third SIP with 60K. After 3 years, as we did last time, after 3 years, your already clinic is running as expense free. After 3 years, you'll start 50% profit in your SIP. Okay, you're making 50% profit on that. Okay, and you will always remember that you will start making profit after 3 years. 50% of your profit put into this SIP which you started in your third fund, and 50% of that profit put in a debt fund. Debt fund, why? In 2 to 3 years, every 5 years, clinic, any commercial venture needs repairing, needs repainting, make it refurbished, make it chaka-chak, make it brand new, so people are happy. अच्छा, बोलता है कि एवरी 5 साल ये लैंडलॉर्ड मस्त करके देता है वो जगह. They will not leave you. The pharmacy will be happy, your doctors will be happy. Okay, they are your consumers, keep them happy. So make sure that you do not be penny wise, pound foolish. Do not save on your expenses and lose your sight on big money. You're going to in 3 years charge them, 5 to 10% more. So that's why don't worry about your expenses. Make sure you do expenses as long as you're planning your SIP and income properly. So now we started first with 50,000. We had 40 lakhs with our first residential property. We started with 30,000 second, and we had a 1.5 lakh crore ka property. Now we starting with 60,000 for our next big venture. So now we go for the next cycle. Next cycle, I started with 60,000, 7 years SIP plan, 10% increment in 7 years. My first was for 40 lakhs, second was 50 crore. Now I'm playing in 1 CR. So now my investment from 40 lakhs has gone up to 7 CR in 12 years. 5 years plus 7 years, 12 years. Now another 7 years, 19 years, 20. So, now I'm looking at 1 CR. So the cycle continues. Every 5 to 7 years, you can buy a new commercial property. Investment now is 1 CR. What we can do is remortgage our first commercial property. Why do you think I want to remortgage my first commercial property? So before we go to investing first here, how to make your money free? Remember, once I said that whatever investment you have made, by 7 years you can get your investment back. 3 years you're already making profit. By 5 to 7 years you can get your property back is by remortgaging. So let's go there and see how you can get your money back. Just one sec. Hello. Okay, can I? Okay, thank you. Yeah. Okay. That's right. Yeah. Okay, I'll call you back. Thank you. Okay, so how we are going to remortgage our commercial property and why? So remortgaging our commercial property. So we had bought that property for 1.5 CR. We said on an average there's an appreciation of 12% every year. So if you take 1.5 CR property 12%, 18 lakhs appreciation per year, you have 1.3 CR. Okay, so in 7 years, your property of 1.5 CR, 1.3 CR is already appreciated. Let's not be greedy. Let's say we have appreciation of 10%. On an average, 10% is acceptable. Okay, so we get 15 lakhs appreciation per year. 7 years appreciation is 1.5 cr. So our 50 lakh rupee, what we had made, we had invested in 7 year, it is doubled and is 1.5 cr. So if our investment of 50 lakhs, if we remortgage it, we can easily get 1 cr. So when we remortgage, we'll not only get our 50 lakhs back, we can get 1 cr back. Okay. So going back at the same time, your income has increased 5 to 10% per year. Okay. And your EMI is same. So our income has increased by 5 to 10%. Our EMI is same. Our company has started profit, which we do not want. We do not want companies to make profit. We want companies to make losses. So our tax we give less. We want to spend money. Okay, we don't want to pay tax. After 7 years, if you do not take a remortgage, you'll start having to make profit. You have to start paying tax. 10 to 20% initially, but within 3 years, you'll start paying 30%. So you remortgage it, increase your interest. So you again have to pay more. Okay, so now we have 1 CR free money coming from this property. We remortgage, we have 1 CR from this property to be used for the next property. So let's go back. As we said, we had 1 CR from our SIP. From our second property, when we remortgage, we have 2 CR. So now, when I buy a third property, I have 1 CR investment from SIP. And if you want, we can just invest 50% of your 50% is our original capital. We can say that our total can be 1.5 CR. Okay, we take the original capital back. Okay, so company's capital is gone, and the so did you understand? We made a profit of 1 CR from our second commercial property. 50% is your capital investment, which you as a buyer take it back. 50% the company is showing profit. That 50%, the first company will give us a loan to the second company. Okay, first company is giving a loan to second company, so that's 50 lakhs plus your 1.5 CR. So total investment is 2 CR. Now, if you look at a loan of 2 CR, we said about one third and two third, you can easily take a loan of 4 CR. So now you're looking at a loan of 6 CR. 12 to 15 years time down the lane, your interest rate will be less than 5%. Okay, already from 12% it's come down to 7 to 8%. In next 5 to 7 years, it will come down to 5%. Your EMI will be 3 to 2 lakhs. So for your next property, your available next venture is 6 to 8 CR. So we started buying 40 lakhs and 80 lakhs ka property. Now we are buying 20 years down 6 to 8 CR ka property. And remember that, as we said last time in the first slide, your housing property is also giving you 50K profit every 12 year. After 12 years, your housing property is giving you a profit of 50,000. So you're already getting profit from your housing property of 50K. And now you have so that threshold to, so even in 3.2K, your 50K is already going to be paid from your housing property. So it's only 2.5K, 2.5 lakhs you have to pay as your EMI. And so this is the way I'm trying to say a cycle when we move forward. So after 12 years, I have one commercial property, I have one housing property. Okay, you can decide whether I want to buy a 6 crore flat for myself or a house for myself with EMI of 50 lakhs, 50K from my housing property, 2.5 I can pay myself. But as I said, initial 2 to 3 times, do not go for your own property. Go for commercial property. I would say that go for a commercial property, either build a nursing home or build a big complex with a big pharmacy, in-house pathology, and a very posh polyclinic. Okay, big posh polyclinic with pathology, with pharmacy. Okay, people used to do radiology, but radiology turns out to be expensive nowadays. So, pathology as a collecting center is very cheap, high profit yielding. Pharmacy is always high profit. And then you buy a thing of 6 crore. So imagine what a big polyclinic, what clinic you will have, what pathology, what pharmacy you'll have. If you want a polyclinic, make polyclinic, or you can have your own clinic, okay, with a pharmacy and laboratory, and then you will be making profit from everything. And like this, every 5 to 7 years cycle continues. Every 5 to 7 years, you can keep on buying a commercial property. At one stage, you can make yourself a big home. Usually, I say after 20 to 30 years, you should buy your own flat because you have already 5 to 7 properties by then. So if your journey starts by 25 years, by 60 years, every cycle of 5 to 7 years, you will have about 5 to 7 properties which are making profit. So in 35 years, you will have about seven properties or five properties, you might have to sell one for whatever reason. Maybe one property you did not do well or something went wrong, so you have to go out. So you'll easily have three to four properties after 35 years. Remember, whenever you sell a property, all your expenses or everything depreciation comes into play. So your capital gain tax is not much. Capital gain tax is 10, 15%, but it goes down. And remember, why you want to sell it? If you want to get passive income, there's something which is called as reverse mortgage. You mortgage yourself reversely, and the bank will pay you to give every EMI every month to take over your property, and that gives you a passive income. At 60, if I have four properties, I reverse mortgage all of them to the bank, and each property gives me 10 to 20, each five properties, each of them give me 20 to 40,000. I'll have 2 lakhs passive income from by reverse mortgaging. After, if I die or my wife dies, if the bank takes away my property, what do I care? I have a big house which my kids will get, and that should be enough. But how to do reverse mortgaging? It's a talk on its own. I'm not going to go more into it. We are about nearly finishing. I think it is the time enough. So this is something which we can talk about next time. So I hope I made a lot of sense. So in conclusion, diversify, diversify, diversify. This is what I believe. Not one thing is good for all. You need to be diversifying into greed, gold, real estate, equity, mutual fund, debt fund. Okay. When it comes to property, location, location, location. Make sure if you have to spend more for a location, go for it. Don't go for a location which is much cheaper and too much at a loss. And if you think that you got your location wrong, cut your losses fast. If you think like how they we say in share market, when the prices are falling, don't try to hold it. It's like holding a knife. It just cut you. Get rid of it. Get rid of the equity. If your location is not good, get rid of your real estate. Do it again. Cut your losses. All greed should earn more than inflation. Okay, debt fund will give you about 8 to 10, 9%. Fixed deposit will give you 7%. Equity will give you 10, 12 to 14%. Real estate will give you 10 to 12%. So all of them are beating inflation. Okay, all of them have its pros and cons. All greed cannot have same return. What equity gives, cash will not give. What real estate give, debt will not give. Gold will give you a balance between everything. By 60, have enough passive income. My aim is by 60 that I'll have enough passive income that if I'm working for fun. I'm not working to have active income. I'm working after 60 to make sure I enjoy what I do. Okay. And self learning. As I said, I did tip trading with Harshal Mehta. I went bankrupt. I went to professionals to help me investment from 1992 to 2000. There was no help. After 2000, I started self learning. I started doing my own real estate, my own investment. I said, I'm smart. If I can do three fellowships, I'm on top of my ranker. Why can't I bloody hell learn how to finance myself? Read, learn, ask. Luckily for you all, with the invent of this online talking, you have so many classes, lectures having, you have so many YouTubes to see, so many books are available free. I have a lot of groups on WhatsApp where I give a lot of books for free. Get it, get those books, investment books for free. Read about it. It's a hard earned money. Make sure you invest it wisely to make profit. Like I said, we only learn by our own mistakes. All of us make mistakes. All of us make, and then we see. I still make mistakes sometimes. I'm not saying that now after 30 years I'm good. You're going to, but my mistakes will be less and my investment will be correct. And the most important is don't be greedy. Greed is good, but don't be greedy, expecting more than what's available. With that, this is real estate made simply. I hope you understood. If there are any questions, we'll take that. And thank you. And that's my email and my mobile. You can SMS or WhatsApp me if anybody has anything. Okay. So I'm going to end my talk over here and then we'll go to the question answers. So if people want, they can unmute themselves. So if they have any questions, while I take from the question, already questions which I have asked. So the first question was, what is debt fund? So it's not related to real estate. So it is related to debt. Debt fund are the company notes. Okay. what is called as non-convertible debentures. It gives you slightly more than fixed deposits. Okay, a fixed deposit gives 7 to 8%. Debt notes gives up to 8 to 10%. In mutual funds, they also have debt funds available, which gives you, or in mutual funds, you can take hybrid, which has 70% equity, 30% debt funds. So that's how debt fund is created. So the next question is, you said this is not a time for buying. So is it time for selling? So very good question. As I said that whenever you make an investment, the principal rule of investment is have a goal of investment. Why am I investing? I bought this property for my retirement. Just because market goes up, I'm not going to sell off until my property. I bought this property for my kid's marriage. So I'm going to sell that property whenever my kid is going to get married. Okay. I bought this property for my kids' education. So when I need it, that's what time. So do not buy and sell. We are not traders that will try to buy low and sell high. That's called trading. Okay. Sometimes you can do that. You might get away with it, but long term, the principal rule, your basic principle is always invest having a goal. Goal directive investment is a successful investment. Real estate investment, first few real estate is my first property will be for me to learn about real estate. Looking, I'll sell it. My first property we bought on my personal name. I will sell it when I wanted to buy my own house. When I bought my own house, when I moved from UK to India, sold my first property which I had bought on my own name. Okay, my commercial property I will not sell because it's a venture, and I've earmarked for different things. I'll only sell them in case I'm making loss or I feel it was a bad investment. Dubai I made, okay, in 2014-15 Dubai was crashing, and I wanted to buy a property in India, and we didn't want to take a loan. So I sold my property in Dubai and bought it over here. Did I make a mistake? Maybe. But as I said, at that time it was falling. I didn't want to go down more deeper. I made cut off my losses and I bought it. If I was invested, just now Dubai is booming. After Ukraine war, Dubai is showing 49% CAGR. But that's luck. What is gone is gone. Dreaming about them is not does not work. So don't try to be a trader when it comes to real estate. Buy, have an aim, and go for it. This is what I'm saying. Not that people do not trade. Lot of big people trade in real estate as they trade in shares. As I said, my business, my friends who are in business and all, they do in real estate, but they have a deep pockets, so they can make profit also, and if they go in a loss, they can bear the loss also. So when you are trading, you have to be as a trader be equally adaptable. That if you make a loss, you should accept the loss also. So that's the one thing of the trading issue. How does maintenance stop by 3 years? See, the maintenance, as I showed you, by 3 years, how it stops is after 3 years, you are increasing your rent by 10% every year. So my rent was 32,000. My EMI was 35. My rent every 3 years will increase by 3,000, So if I was charging rent of 32,000, it'll become by 34,000 after 1 year. It'll become 36,000. Then it'll become 38,000, 39,000, and 555. So it'll reach about 40,000. My EMI is 35,000. Okay, so I'm making after 3 years, my rent is 40,000. I'm paying them 35,000. 5,000 I have extra for my expenses. So my expense, which was 10,000, comes down to 5,000. So nearly by 3 years, you can become rent free. Your EMI is free for sure after 3 years. So this is how your maintenance stops. So please explain taxation and income for real estate. So very important question. Very important. There are two parts when we talk about taxation and real estate. One part is personal taxation. Do not buy real estate for personal taxation benefit because there's an upper load slab of 2 lakhs. Okay, so do not buy for personal benefit taxation के 2 लाख taxation बचाने के लिए मैं real estate में invest करूँ. पहला real estate you are investing not for tax purposes but to gain experience to climb the real estate ladder. Okay, so first on your own. Second part, the more important part, taxation on commercial property. Okay, you are making a company, and when company invests in real estate, company invests in real estate, the all the loan given to the company to buy a real estate, all the interest on this is tax free. So if I bought that 80, I bought 1 CR ka loan, 85,000 is my EMI. My 85,000 rupees is tax free. So unless I cross 85,000, 85,000 in my profit, okay, I'll not pay any tax. Only when I reach 90,000 as a my profit, my income from my real estate, I'll pay tax of 5%. So that's why it's very important that you start a company when you buy commercial property, so you get benefit where all your interest is tax free. Now, not only your interest is tax free, as a company, even the tax benefit you get for your employee. What money you pay to the employee is your expense. What money I pay to renovate my to make my nursing home, my polyclinic, my pharmacy is an expense. Okay, so that all is tax free. So first 3 years your company will have so much expenses, it will take you 3 years to before you will cross a taxation margin. So you will be tax free for 3 to 5 years. After 3 to 5 years you start making profit, and that's why I say at 7 years you remortgage your property. So again, your taxation benefit comes. So it's a cycle. You need to go through the slide again. You need to learn about it more, read about it more. And this is briefly about taxation. What are the difference about personal taxation benefit and company? And hope I answered I answered any of your doubts. If still any doubts, Rajesh, please ask them again. So I have 30 to 40 plots of around 10 to 15 at my small town. Shall I sell and invest in big city? And should I buy commercial or residential? So there are two parts to your question here. So if you have 30 to 40 plots, okay, in a small town. Now, as I said, do not sell. First, you need to do your own investigation. You know your town properly. Is it a town like, Pune? Pune is a town like from Bombay. It's a small town in those times. Now it's become a big city, but it's rapidly progressive. Okay, Pune is giving a demand 500 times more than Bombay, and is giving much better CAGR now than Bombay. If you want, people are investing outside Bombay more than in Bombay. So same thing, you need to do your homework. You know your property. Find out what's the demand of real estate in your own. What's the demand of real estate in your own area? See what the increment it is coming. What is your return? What is your compound annual CAGR return in your city? What is the demand? What is the supply? What is your CAGR? And then you decide whether you can make it over there or you want to sell it. Very important, you are lucky to have 30 to 40 plots. If you have 30 to 40 plots, always make a commercial property. Don't try to make a residential property. Okay? Make a company, hand over the properties to a company to take care as a management company. Okay, take a loan as a management company to develop that property, so it becomes a venture and you can do that. Now that's, as I said, making a property, making reality as a thing is not the part of this talk, but you're going to that area of reality. Okay, where making a commercial property of 30 to 40, or making a mall, or making a big commercial hospital and all, it's a big investment which I'm not talked much about. I like to keep it as bare minimum, where as a first step you understand about residential property buy to let, commercial property buy to let, and that's all. And remember, I've just used those things as example. Don't try to fix everything into that. Okay, my idea is to get the gist about how to start property ladder, how to start commercial venture, to show the advantage of commercial venture, to show the advantage of taxation. Same time, use that money to start SIP, making sure that SIP is for your real estate. SIP for your real estate, SIP for your kids' education, SIP for your retirement, all should be differently earmarked. So you should be having your own focus how you're going to do that. Real estate, gold or diamond or shell, which is most beneficial? Oh wow. As I said, as I showed you, there's nothing like one thing which does it all. Okay, there's no hidden ace. All of them are good. All of them have their good points and bad points. You have to find what. In this, only I can say that diamond are bad. Diamond has lost. Diamond is out of commodity because of artificial diamond coming into market. Modi himself is propagating artificial diamond. Diamond is down by 30 to 40% now. Okay, only diamond is good for if you want to buy diamond for your own use. It's 30 to 40% down. You want to make your wife happy, buy duplicate lab grown diamond. 30 to 40%. It costs 10% of the original diamond. She'll be happy. So if you're going to buy 1 carat, buy 4 carat, and she'll be very happy. So diamond is good for your own luxury investment, but nothing more as an investment portfolio. Real estate, gold, or equity, all are equally good. As I said that in my 3 slides, you have to decide what work what. You need to have all three. You can't say I need only one or two. Obviously, you start with mutual funds first and then decide whether you want to go into equity or you want to go into real estate. Is a rental increase of 10% every year is allowed? Most of the time, 10% is taken as a hallmark of increment in real estate. But you have to look at how it is going in your own property. Remember, in my commercial property, I said that for my doctors, I'll give them 5% increment. I might give them 0% increment. Okay, so for doctors, it'll be different. But for my pharmacy, I'll always make 10%. When I make a posh clinic, I'll keep my increment as 15% because I'm making a clinic of 56 CR. So you'll have a big pathology, big things. You can ask for big increment. 10%, 8 to 10% on average is acceptable. Can we invest in real estate company? See, investment in real estate companies in REITs are not touched much. It goes into equity and mutual fund. Investment in REITs, it's like investing in mutual funds. Okay, so if you are somebody who does not who are very passive investment, are just going to put money into index funds, are just going to put money in mutual funds, then you can consider putting in REITs, real estate investment trust portfolio. Then you can do. But would i would I trust my real estate? No. Why? My personal feeling, obviously with my own experience, I find equity better than mutual funds, real estate investing myself better than companies. Because how in India, remember, 30% of real estate dealing comes in black. How will real estate equity companies show me those black transactions? So what real estate company does is they make a subsidiary. So this is a plot of land they want to buy. Now the company can't give black because it's not allowed by the regulations. So its subsidy will give the money in black. 1 लाख का प्रॉपर्टी है, 30 लाख उसने ब्लैक दिया, he'll show 70 lakhs. Okay, he showed 70 lakhs, but when he sells this property to the company will not tell you what this guy has bought. He'll put his own surcharge. No, he'll put 20% on his own surcharge. So 1 lakh ka property he'll sell him for 1,20,000 when actually he's paid only 70,000. And 30,000 ka one third, 10,000. So 80,000 ka property is selling for 1,20,000. So that's what happens. Even when you sell the property, when people are selling, when DLF and all are selling the property, lot of transaction goes in cash. When I go to buy property, if I say I have all the cash money, I get a much better discount than I'll get when I paid full white. So real estate companies is something to go for. But remember, real estate companies are your satellite companies, are your periphery companies. It cannot be part of your core portfolio which you hold for 10 to 20 companies because it's a cyclic company. Real estate goes up and down like your shares. Okay, you may buy Tata, you may buy MRF, you may buy some big shares and keep for lifelong. Real estate companies cannot be for lifelong. They're cyclic. Every 3 to 5 years they'll go up and down. One year, one cycle, one company will do better. Next cycle, the next company will do better. Sahara was very good 10 years back. Sahara is bankrupt now. So you have to be very aware of it. So which is better investment, apartment or farmland? It's like comparing apple and oranges. You can't compare apple and oranges. I've not talked about farmland. I don't have experience about farmland. I will not talk about it. My experience in real estate is in house and commercial. That's what I will talk about. I'm a pediatric intensivist. I'm a pediatrician. I do ECMO. If you ask me about adult things, I'm not going to say. I'm going to refer to an adult. So when you talk about farmland, I can't talk. You have to ask for real estate people who are good at farmland. So I'm sorry, but I think it's very important to clarify. You ask people who are good at what they do. So I hate when one doctor takes all the lectures. One doctor or one expert takes a lecture on everything. I think it's impossible. Today's days of specialization. Each lecture, each topic has to be taken by people who are good at that. I'm good at overall wealth creation. I'm good at real estate. I'm okay at gold. I will not give too much talk in equity because I've lost a lot of money in equity. Okay. So that's what you
Is
have to
your
know what
client
you're good at.
and
So that's why. So I will not be able to answer your question about farmland. So I'm so sorry, Dr. Reddy. You'll have to ask someone else. There's a property in hill station for personal use. It's a debt investment. Can I benefit by any means of thought? I don't want to give it for lease. Excellent question. So if you have a real estate property, you do not want to give it for the lease. 100% don't give it for the lease. Okay. Make a management company. Okay. And then go on Airbnb. Airbnb will manage it for you and give that property. So when you don't use it, they'll make an income out of it, and then you can do it. Lot of people in Europe and America, when I travel abroad, I don't stay in hotels. I stay in Airbnb where somebody's flat is free and I get it for a cheaper rate. He gets benefit, I get benefit, and I get a kitchen and everything which I can use for. So yes, if you have a lot of people are doing it in properties in Karjan and Lonala, which are hill stations next to Bombay, where they give this to professional management company, where they are assured so much return. At the same time, they are assured when they want it, they'll be given a first priority. So yes, your holiday home can be used to make money. Is it worth investment in retirement home? Investment in retirement home is like again investing in companies which are like real estate companies, and retirement homes is the last thing. So I don't think that the investment in retirement home is yet mature enough for us to make it as an investment portfolio. Okay, it's very lucrative for people to sell कि जब आप बूढ़े होंगे आपको ये मिलेगा. अरे काय को जब मैं बुढ़ा होगा मेरे पास ज्यादा पैसा होगा मैं खुद के घर में रिटायर्ड होकर रहूंगा विद रिटायरमेंट. I'll hire a nurse, I'll hire a ward boy and stay myself in my own house. So, that's the confidence you should have that I'll make enough that I can take care of myself. Our kids are not going to take care of us as we take care of our parents or our parents took care of grandparents. So you have to make sure that you have enough retirement portfolio for your own use. Thank you, thank you, thank you. Multiple thank yous. Nice sessions. Thank you for all the compliments. So I think we are nearly there. So if no more questions, then until we can end.
Yes, sir. Yes, sir. I think it was a very informative session, almost 2 hours. Thank you, sir. You have been having a lot of energy and a lot of insight. I think whatever you shared us out of your experience, which is very much valued. And as you said, we have different speakers for different specializations. But most of our speakers are doctors. Like we had Dr. Manoj Kumar Agarwal. He's a very good speaker in mutual funds. And we had Dr. Harish Tolia, who is very good in
Harish, I
analysis.
know, yeah.
Yeah. So
Yeah.
thank you, sir. And I think all our
Most welcome.
people have enjoyed and learned a lot today. And though it's a weekday, as, most of us participated. And the next session will be on next Sunday. So I'll keep you updated. Thank you, sir. And thanks everybody for being with us. And see
Thank
you
you.
next Sunday. Thank
Thank
you,
you,
sir.
Sandal. Thank you, everybody.
Thanks, sir.
Thank you so much, Doctor.
Thank you. Thank you for your compliments.